Alrighty guys, welcome back to the best investing money management channel on YouTube. In today's video, we are going to be talking about the one, the only Bed Bath & Beyond, ticker symbol BBBY. We're going to be covering what's going on with this stock, why it's up 22% today. We're going to be covering should you buy, should you sell, should you hold. So I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe. It really helps me out when you guys do that. So what's going on with this company? Well, looking at this chart, you may notice in the matter of about a week, this stock has gone from about $4.50 all the way up to $30 a share. And anytime you have that type of move, this causes a lot of investors to say, whoa, maybe I should buy some of this, putting a lot of emotion, a lot of, fear of missing out, because people always want to make money. So when they see a stock pop up and other people make money, that makes them want to buy this stock. But looking at this chart, if we actually go ahead and we go to the daily chart here, you may notice this stock has pretty much been going from about $28 all the way up down to about $4.30. The reason why we've seen so much sell-off from this stock is because this thing was a sinking ship. The company is putting out terrible earnings, just having a very hard time, especially with lockdowns, and a lot of stores actually closing. On top of that, the most recent earnings here missed expectations. They did not do very well. And on top of that, right now they have a negative profit margin. So the company is not profitable. They have a profit margin of negative 24%. Pretty much what this means is for every $100, Bed Bath & Beyond brings in, they actually lose about $24 for each $100 they bring in, which is terrible. You never want to invest into a company that is like that. You want a company that's killing it on their revenues, continuing to increase their net profit margin. So I just think right now, just on the fundamental side, they have decreasing revenue. They are not profitable. They're actually losing a lot of money, and it's just a sinking ship on the fundamental side. On the technical side, you may notice that just because they have bad earnings, why has this stock gone from $4 to $30 a share? Well, this is because of a short squeeze. So a short squeeze is pretty much all these people during this time were shorting Bed Bath & Beyond. And anytime you short a stock, pretty much what you do is you have to borrow shares from your broker and you buy them back at hopefully at a lower price. The issue with that is if we get buying pressure in it and we have an initial move where the stock moves just a little bit, this will cause some of the short sellers to say, oh my gosh, I got to cut my losses. And what this causes is all these people to actually have to buy those stock. And what happens when you buy stock? That stock goes up, which causes more people to want to, cover their losses. And then on top of that, you'll have people on the opposite side saying, oh my God, this stock's going to the moon. I should buy it. So you just have this fuel into the stock, right? It's like putting gasoline on a fire. It's a perfect storm for people that want to go long on a position and make a lot of money. And the issue with it is on the short side, there's no max loss on a short. The reason why is because if this stock continues to climb up to $50, then $100, and you're shorting this stock, you're losing money. You're in the negative. You're in the negatives. So there is no max loss with shorting a stock. Going long on a position is awesome because obviously if the stock's only $23, the max you can lose is $23 for each share you have. On top of that, but why would you want to invest into a company that's a sinking ship with decreasing revenue, just having a hard time getting through, all of those lockdowns we had, a couple years ago? Okay, so that's kind of what's going on with the stock is we have just a whole bunch of short sellers covering their position, causing those stocks to pop up. It's a very similar thing that we saw with ticker symbol GME, about a year ago. The same exact thing where GameStop went from, $8 to $24. But you may notice just as fast as this thing popped up, it sold off. And that's what I expect, Bed Bath & Beyond to do. On top of that, another stock that had a very similar run was AMC. AMC did a very similar situation where the stock popped up and then it sold off and then it stair-stepped its way back down. So I definitely think answering that question that everybody has is, should you buy Bed Bath & Beyond? I think right now for a long-term investment, this is not going to be the move, right? Look at the volatility where the stock has gone from, $15 all the way up to 28, back down, back down to 18, back up to 30, back down to 18. The volatility on this thing is just way too high for somebody to invest in. I honestly think you would have a better option or a better chance of making money trying to short this stock than going long in this. But personally, am I going to buy or sell or short this stock? No. The reason why that is because of how volatile this thing is. I don't know if this thing's going to pop back up to $30 again. It's done it several times in the past, so there's no indication that it won't do it again. So if I short this thing, I could lose money then. And if I go long into this position, all the fundamentals are saying to sell this stock or cover, just not hop into this. So we could just have general sell-off on it. It's just a lose-lose situation. And I understand you could still make money, day trading or possibly swing trading if you get in at a good price. But for me, I just think right now I'm staying away from this position. I don't see the risk and reward lining up. I would say the best option for this stock would have been trying to short this thing near and around probably these moving average lines. As you guys can tell, it just has that tendency to use the green moving average line, which is, that 90 moving average. It just has that tendency of getting buying pressure near and around there every time. So there could have been a trade, obviously there. But on the flip side, it's just way too risky. You may notice this thing popped up right on that moving average line to 27, stair step, consolidated, and then just got obliterated down to 20. So the volatility is just way too high for this stock. I'm staying away from it. I would highly recommend beginners staying away from it. And even though if you're an expert or intermediate trader, make sure you do your due diligence with this one here. It does have some support here at 18, but I expect that to get broken down relatively short here. So guys, that is it. I hope you guys enjoyed it. If you did, hit that like button, subscribe. If you have any questions, let me know down in the comments, and we'll see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.